Hey guys and girls, it's Tuesday, the 18th October 2022. Big questions for Jason Shapiro here, the contrarian himself. Market's been short as Danny DeVito for the past, I don't know, 12 weeks. And I suspect Mr. Shapiro's been buying bits of it all the way down. What do you reckon? Have we put in the bottom, Jason?
I have not been buying all the way down. I've been buying some things, but not stocks. And unfortunately, the things that I've been buying are not rebounding to the effect that stocks are rebounding. But they also didn't go down like stocks were going down. The things that I were buying stopped going down. And now that stocks are rebounding, they've stopped going up, which is unfortunate for me. But are we at the bottom for the stock market? That's the big question, right?
Well, this is it. I mean, well, just before I kind of wallop you with a big question like that, some stuff that we've been looking at, like the NASDAQ came back to a massive trend channel that's been in since about 2008. That came down to the top of the channel last Thursday, and just huge amount of buying coming in. You had those hot CPIs, ISMs, record amount of puts being bought. I heard in the VIX, uber bearish stuff. Are these your kind of, once we didn't make a new bottom Friday, I was thinking, this is kind of Shapiro type stuff here.
I mean, the real theoretical Shapiro day was Thursday, because that's really what I like to look for, right? I mean, the bears got everything they wanted on Thursday, right? High CPI, it's exactly what they wanted, and we saw what happened, right? The market not only went up, it went up a boatload. And I kind of thought at the time that it was, I mean, these are the kind of reversals that I trade all the time. I thought that it was sort of too strong in a way, because it gave everybody the chance. The whole afternoon the market was up. It gave everyone the chance to buy there. I thought those people needed to be scared out first, and that's kind of what happened on Friday. So now it could probably resume. Is it the bottom? I personally think no, but that doesn't mean that we can't rally a lot, because of all the reasons that you spoke about earlier, right? I think that Thursday low is certainly going to be good for a while here. And a while, I mean, to me, that can mean a few months, right? Do I think that it's the ultimate bottom? No, but what I think and what happens is usually not correlated very highly. But I'm pretty, my feeling for the last month has been people are too bearish short term and not bearish enough long term. That's my feel. So which means I think the market's going much lower, but it's going to take, and it's going much lower, and it's also going to be a lot longer than people want, right? So if that's the case, then clearly you need to bounce. It can't go down every week and every month. Otherwise, it's not going to take a long time, because it'll be at zero eventually, right? So yes, I think you need some pretty good bounces in order for that theory to be right anyway. So that's kind of where I feel like we're at here. I mean, this kind of, to me, has classic bear market squeeze written all over it. Now, that doesn't mean that it can't go up a lot, right? Usually a bear market squeeze is strong, and the reason it's strong is because everybody thinks it's a bear market squeeze, so they keep selling into it, and so it keeps going in their face until they give up, right? And that's where I think we're kind of at here, until these.
Plus, you got a lot of liquidity on the offers. People saying, "No, this is way too far down. I want out."
Yeah.
So those sell orders just giving us that liquidity to go up, I reckon. A bit of that going on.
Yeah. So I think there's still upside here. It depends on your time frame. And the real case is, we all know it. At some point, the Fed is going to have to stop, right? And we've seen that everybody wants to, everybody wants to buy that idea, right? So
This
to
is the big
me,
question. Like coming into last week, you know, we had any sort of flurries of buying we had up until last Thursday. You'd see the buying on the tape, then the talking heads on Bloomberg, CNBC, they'd say Fed pivot, you know,
yeah,
potential for a Fed pivot. And
right.
and the guys in the room here talking capital will tell you, I was just saying that is absolutely insane. They're going full tilt at this.
Oh yeah,
Not
yeah.
about to like put the brakes on and turn the bus around.
No, it's ridiculous. And so those people kind of had to give up on that idea, really, for a proper bottom to be in, right? And it seems that even now, you're not hearing anybody talking about Fed pivot anymore, right? They're just scratching their head. Why is this thing rallying? You know, maybe the Bank of England garbage or whatever. But
Well,
the
yeah,
Fed pivot idea has been thrown out. So that, to me, that's bullish, right? It's more towards what you talked about, you know, capitulation kind of thing, right? They've given up on that idea, so therefore we really can get a bottom. And that's where I think we're at. Do I think in 8 months' time we're going to be higher? No. Do I think in 5 years' time we're going to be higher? No. But in 5 days' time, could we be higher? Sure. You know, it's
yeah.
definitely a tradable rally here, you know.
So let's peel this back a bit, because I want to get around to kind of asking you about like the assets that you're looking to trade. And obviously you said that you're trading stocks. But I'd be interested to see, you know, on the indices front, you know, we trade futures on, you know, NASDAQ, Dow, SPOOs, DAX, stuff like that. But coming back to your overall view, I mean, everything seems priced in right now. I mean, what seems to be the market, what seems to really be twitching the market a lot is you know, coming up until the appointment of Jeremy Hunt, you know, and basically the scrappage of Liz Truss's mini budget. The market really has responded, both sides of the water, I think, very well to that. The bond markets, I think, are doing reasonably well now. But I suppose on the macro outlook, you know, this is just a pullback in what we presume to be a bear market. You know, what do you think? Because everything's priced in now. What do you think is the next thing the market's going to price in? 1% rate hike in November?
To me, the bearish case, the uber bearish case, right? Which, let's face it, doesn't happen very often, right? So it's sort of a bad bet, right? And I don't trade off of this kind of thing. I trade off of my thing, right? But if you want to get into the fundamental uber bearish bet, it's the fact that, you know, these central banks created the biggest Ponzi scheme in history since 2008, right? They printed all this money, printed all this money, printed all this money, and now that has to unwind. And Ponzi schemes don't unwind in a small way, you know, they unwind in a very, very big way, right?
Sure.
That to me is the uber bearish argument, right? And I don't really hear a lot of people talking about that necessarily. We're talking about, okay, the Fed's raising rates and therefore the stocks and bonds have gone down, and, you know, and that will end and then everything will go back to normal. I don't think everything goes back to normal, and I don't even know what normal is. Is normal the central bank prints ridiculous amounts of money every day and every week? Is that normal?
So, okay, so an unwinding of the balance sheet, what's that going to look like to us in these markets? Where are we going to see the smoke signals? Is it going to be pure capitulation back to like '08 levels in the bonds? Are we going to see, you know, dollar complete sort of risk premium coming out of the Dixie? You know,
I think the tell market wise will be, and this gets back to the whole Fed pivot thing, right? If the Fed were going to pivot, let's say it's in whatever, right? Or even stop. They're not going to cut rates, obviously, but, you know, maybe
let's say March 23, they start to calm down.
Right. So my feeling has been March 23 is far away for this scenario that I'm going to talk about, but whenever it is, the market's clearly not going to bottom the day that that happens and then just start going up, right? It's going to discount that in and it's going to go up into that, right? And my feeling has been the day that the Fed announces they've done their last rate rise is going to be the high of the market. You know, we'll get the typical buy the rumor, sell the fact right there, right? So whether that be December or March, to me, that's the play. The market buys it into that and then tops on that. And that will be the tell. I don't know whether that happens or not, but we have a lot of steps that have to happen going into that. But if that were to happen, that's the tell. The big tell for me for the uber bearish situation would have to be the other way, which is that the markets will start to go down, 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 nothing stopping it. And then you'll get some intervention, some QE again or whatever. QE. And the markets reject that, right? That's the uber bearish situation. Because what happens when QE doesn't work anymore? That's the question, right? Now, does that mean that the next time they do QE, it doesn't work anymore? No. This could be 10 years away for all I know, right? I mean, you could have been short QE since 09 and you'd be getting absolutely killed, right? But that, I think, is the thing to watch for. QE happens, stocks, bonds, and dollar reject it. And if that happens,
a bit of that on the UK.
We did, and I really thought that was bad. I've been talking about that for the last few weeks, right? When the UK first did it, it did nothing, right?
Well, it's because they couldn't afford that level of QE and general stimulus on the energy package, and the market very quickly interpreted it as that.
Right, and I don't think, I mean, define afford. What does afford even mean with these central banks anymore, right? Well, what can they afford? I mean, yeah, they can print money all they want, but you know, there's no such thing in life as limitless anything, right? Physics will tell you there's a limit to anything, right? So where is that limit? There's no way for anybody to know where the Fed's limit is to how much money they can print, right? They own the machines, they can print whatever they want, but at some point, when the market rejects that printing, that's when you've got a problem, because then more printing just becomes a bad thing after that, right? So it's just a question
of seeing. That leads us back to the Dixie, you know, where, I mean, look, being short the Dixie
has been
for
painful.
any amount of time, like the worst trade ever, right? Like, you know, but, you know, every time print 40% more dollars in 2020, screams up strong Dixie. Obviously there's a risk premium. It's the only globally traded currency.
Right.
When is it, you know, a risk asset versus when is it just super crammed toppy? Because we've seen time and time again, you know, market talking heads saying long dollar, short currency pairs against it is the crowded trade. We need to come off the highs, and we just don't.
No, we don't. We did have a magazine cover. It was either Barron's or The Economist. I think it was Barron's, came out 2 weeks ago with the classic sort of magazine cover top for dollar, which maybe is the first sign, you know.
Wow. Okay.
And we haven't made new highs in the dollar, I guess, in I don't know how long. I mean, the new highs really were mid-September
now.
Well, it's been mid-September, right?
Right.
So again, I have no way of predicting. I just watch the tape, right?
Sure. I'm here.
So to me, that's when you watch for that, right? When the dollar doesn't respond. It hasn't really done anything necessarily that it shouldn't do, other than the fact that, you know, stocks did touch new lows and the dollar didn't touch new highs. You know, you could argue right now, but it's all about watching the news and watching the tape and letting the market tell you when, right? Rather than trying to predict. I have no ability to predict when, you know. I just try to make some money.
So same here, man. And so let's come back to the assets that you're looking at. Like, you know, you've been looking at stocks, but you're not really on indices or futures here.
I'm not involved in the stock indices here.
And what about metals? What are you looking at in metals?
Yeah, like this has been horrible. Rather than my trade was, rather than try and trade the stock move, if assets were going to rebound, I was going to trade things like copper, gold, cotton, where people were super short, and that's not working. You know, it worked. What I was doing sort of the last few weeks was I was buying those, and I wasn't convinced that risk assets had bottomed or anything, so I was shorting SPOOs against it. And that was working, SPUs were hitting new lows. Gold wasn't hitting new lows, right? Cotton had a nice rebound, although it's given most of that up. And copper, stayed well off the lows too. So that was working.
You're trading spot market on these, are you?
I trade the futures contract. Yeah.
Oh, okay.
Front month futures. So that was all good while stocks were going down. But now that stocks are rebounding, I'm seeing gold hasn't budged. Copper hasn't budged, and cotton is probably going to stop me out pretty damn soon here. So it was great that it worked while stocks were going down, but I lifted my stock short hedge, and I'm just running the longs here, which should have been genius, but as it turned out, the market once again humbles me, because now stocks are going up, and I'm glad I'm not short them, but gold ain't doing anything, cotton's not doing anything, and copper's not doing anything. So, and
yeah,
I can't say I understand why. I could sit here and make a million excuses for why it's not. Maybe it's because the bonds haven't really gone with stocks, right? So the rates haven't.
Well, yeah, that's what we were looking at yesterday. It was gold was really highly correlated to the bonds.
Yeah,
yeah,
that's what I think. That's what I think the issue is for me. And for bonds to go up is going to be a lot harder than for stocks to go up, right?
And it's kind of decoupled off the dollar as well a little bit. So
yeah. So that's kind of what I'm stuck in, unfortunately. Hopefully something good happens, but as of right now, nothing good is really happening for me. But
as we put in these, listen, thanks for jumping on. As we put in these lows on Thursday, hell of a day, 6% range almost, 5.5 on the SPUs, top to bottom. Yeah, I just thought I was looking for that new low the next day, and I thought, okay, that's definitely what we were talking about the last time.
It was like a 1,500 point range or something like that in the Dow, in 3.5 hours, right? So crazy, I thought Friday was a good day for that argument, because you needed to. It's not going to be that easy, right? So you need to sort of scare those people that tried to buy that out, which I think Friday did.
Absolutely.
And then Monday, then yesterday you come in. If Monday had come in and the thing puked and went through lows, a different story, right? But the fact that Monday now, and now we're even getting more follow through today, right? And it's happening so quick. The Dow's already up another 600 points today, right? So it's running away from people, and that's what a short squeeze is all about. It'll run away from them, and eventually they'll have to chase it, and that'll be the end. Now, is that in 3 days or in 3 weeks or in 3 months? Hell if I know.
I think, I don't know, what we're looking at, I think it's going to be 39.20s on SPUs. I think it's going to have a problem really holding it set above there on the S&Ps.
So the one thing that I like to listen to are, some of my my favorite fade people, right?
Kramer. Did you see the inverse Kramer ETF?
Yeah, it's funny.
Hammered down 54% on its opening day.
Is that what happened?
Yeah.
I don't even know how you do that. How do they do an inverse Kramer ETF? He doesn't short, so how do you buy what he's short if he's not shorting anything?
I don't know actually how it's constructed fully, but I just know it took a wallop.
But his buddy, who I think is the absolute worst, is the guy Dan Nathan on CNBC.
Okay.
You're talking about a guy who was bearish from God knows when, 2002 or something,
right.
And he's of course still bearish. His comment the other day, and there's a guy who's been long TLT for 2 months, right? Because he thought it was oversold 2 months ago, right? He's horrible. So his comment the other day was, sure, we can rebound, but there's zero chance that it can get to June highs. So, I'd like highs. Yeah, June highs are very far away.
The last pullback top. Yeah.
Right. So June highs are very, you're looking at somewhere around what?
They're about
4,300 or something like that.
June highs. Wow, that's 41. Or no, sorry, that's September. June highs.
Oh, I'm sorry. It must have been the August highs, right? The last rally highs, right?
Well, the last, yeah. Okay. Well, the last rally we had a peak up. The August highs was about 38.
I'm looking at the S&P. I'm looking at
for that
43, right? On August 17th.
August. Oh, August 17th. Yeah.
August
I mean,
16th, it
that's
looks like 43. So in the back of my mind, when Dan Nathan says something has a 0 possibility of happening,
that's
that's
where
in
we're
the
going.
back of my mind here. And you would have to think that we go there, no one's short, right? We take out 4,300 in the S&P, nobody's short. I don't care who you are, right?
Right. Yeah.
And at that point,
Yeah.
I'd be
That's
looking
a
to get
good
short
shoot.
again. You know,
Yeah.
can it really get there? I have no idea. But again, just
We
back of
went
my
up
mind
there in
stuff.
2 months. If we went up there in 2 months, I'd short that for sure.
Yeah,
Absolutely.
that's what I'd be looking at. So that's kind of really the only, I can't get long stocks here based on my stuff, my positioning stuff and all that. So I can only hope, and I haven't really, other than hedging my other stuff, I haven't been position wise short, right? I was shorting because I was hedging, but it wasn't like a true sort of position. The only way I can get a true position here is if it rallies. I'm hoping for this for 3 months. If it rallies and people get long into it, get out of their shorts, get long into it, believe that this is the game and we're back, then I can short that. So that's kind of what I'm waiting for.
Right.
And hoping that if that does happen, that these other assets actually go up.
What sort of
Trading
sectors are you
strategy.
looking at? What sort of
Sorry?
sectors are you looking at on the long side?
Yeah, like I say, I'm long this gold, I'm long this cotton, you know, and I'm
Okay.
long copper, which are, I see cotton's up a little bit today. Gold's not is down and copper's down, so it's not doing.
But in terms of stock sectors, single stock sectors.
I mean, I don't really trade stock sectors, but I would be focusing on those, I guess, if I'm looking at the commodity. I'm not a big believer that the stocks necessarily follow the commodity. We all know that gold companies are horrible, you know, and trying to trade gold companies on the back of maybe gold going up is a terrible idea, you know, but
Tell me about it. Barrick Gold 2021. What a dog. What a
yeah, I
dog.
saw a thing yesterday on TV where they were talking about how much the OIH has underperformed oil, right? And it's like a massive amount. This woman on TV was talking about how she's been long OIH because she's been bullish oil and it's just killed her, right?
Gone nowhere.
Right.
I think they reconfigured how they construct that ETF in 2020. Actually, a couple of them got reconfigured how they index the ETF.
Clearly didn't do a very good job of it.
Well, it's actually dampened the hell out of the volatility because of what was going on with the exchanges on oil over kind of spring 2020. But
oh yeah,
a couple of our guys did really well on oil ETFs. I can't remember which ones they were on, but XLE being fantastic, trading 80s out of was like 30s in springtime 2020.
Right.
All right. Well, listen, thanks for jumping on, man.
Yeah,
really
no problem.
Chat with you.
Yep.
A little catch up, and no doubt, hopefully, we'll chat to you again. Well, I'll tell you what, we'll talk to you at 4,300.
I hope so. Quite frankly, I hope it gets. I'd love to see it get there because all I personally want to be is short. I can't be short here, so I'd love it to get there. I'd love it to get there. I'd love the Fed to stop, and I'd love the market to fail right there. That would, to me, would be almost too good, which is why it won't happen. But that would be too good.
I think if we fail here, that's going to be kind of scary, actually, because then you got to be looking at last Thursday's lows, right? We fail here spectacularly.
I mean, last Thursday's lows get taken out. Clearly, it's a whole new game, right?
It's not that far away, but it doesn't look likely for being taken out at this time.
And again, in the back of my mind also is that, to me, the single most important chart in the world is the inflows into stocks chart, right? Over 2020 and 2021, right? The inflows, I believe in 2020, retail inflows into the stock market in 2020 were larger than the previous 25 years combined, right? To me, that's the single most important. That's the single most important chart there is, right? And you continue to see that. I think 2 weeks ago they said that you had the 4th largest inflow week into the stock market since 2008, retail money wise. So I'm just such a huge believer that money doesn't make money over time, right? Doesn't mean the market can't rally, right? The short-term move is more about hedge funds and how they're positioned. And we know they're positioned short because those guys are killing it, right? These macro hedge funds and all these people and the CTAs are killing it, right? So we know they're short. So to me, the short-term movements are going to be determined by them. But on a long-term basis, it's going to be determined by the fact that there's still too much retail money. I mean, go talk to anybody and they all say the same thing, be it my mom, my brother, or every single person I talk to, right? That has been sitting in this 60-40 portfolio for 20 years.
Oh,
right?
they're getting hammered, man.
And they don't touch it. They don't touch it. They've been taught not to touch it, not to let the market volatility worry them, right? And it doesn't matter how many times you say, you know, interest rates went from 18% to 0% since 1982, and that's not happening again, right? Doesn't matter how many times you tell them that, they don't care, right? You ask somebody on the street now what to do, they say, you don't sell here, you buy here, right?
Yeah.
I can't see that working. Can it work, you know, for the next 2-3 months? Sure. In fact, when it works for 2-3 months, that's what hurts them more in my eyes, because it keeps them in, it keeps them happy, and then you make a new low, right? And it's time that kills the long-term investor, right?
Yeah, but the 60-40 squad, you know, they're on minimum 10-15 year horizons, man. They don't care. 20 years, they don't care.
No, I know, and that's why I think that they're going to get. That's why I think they're going to get destroyed. You know, I really do. You know, I really do.
Well,
right?
Well,
they keep saying, "Oh, well, if you buy here in 5 years, you're going to be very happy." I would be willing to bet that that is not the case. I think in 5 years, you're going to be very sad. You know, in 5 weeks, you might be happy, and in 5 months, maybe you'll be happy.
Hold on now. We were 26% off the highs, tearing in, buying some cheap dividends for something that you barely look at all the time. Yeah, all right. In 5 years, maybe you won't be so happy, and then they'll be saying, "Oh, don't worry, I'll check back in another 5 years."
That's right. That's the danger that we're in. I think these people have been sold a bag of goods because of the returns from 1982 till now, and I think that bag of goods is going to come back to hurt them. Just my
now
feeling.
that you bring, okay, so you bring, okay, if you're going to bring that up, I got to ask you, what's the puke point on that portfolio? What is your mother's puke point on a 60-40?
My mother doesn't have a puke point. She doesn't have one.
Exactly.
It doesn't exist.
So where's the capitulation going to be on those portfolios? It isn't really, because
it's going to be self-capitulating, because what was $1 million portfolio is going to be a $200,000 portfolio, right? So maybe you never capitulated, you just lost all your money.
Yeah. And your broker's telling you to buy more.
No, and the broker's gone because he's lost his job. You know what I mean? Everybody, I went to my high school reunion a couple of years ago, and I swear 70% of the people that I talked to were wealth managers working for Merrill Lynch or, you know, Morgan Stanley or whatever, right? That business has to be shrunk. To me, there's 3 things that have to go on before this is all over. That business has to be shrunk by about 70%, right? Not everyone can be a wealth manager, right? Not only shrunk, those people need to be hung, right? 2, I think Kathy Wood has to be out of business.
Oh man!
Before this is over,
now
right?
You're bringing Kathy in here.
She's got to join a nunnery, right?
Kathy's down about what, 78% now?
Yeah, she's got to be out of business. And 3, this guy Saylor has to be blown out, right?
Yeah.
You know, those 3 things have to happen
already on Bitcoin, man. He took a bath on his crypto,
but he's still alive, so he has to.
He's still in the bath.
He's got to be dead. Kathy's got to be gone, and these wealth managers have to be shrunk by 70%. Once that happens, I'll be interested in buying.
You really think Kathy's going to 0, or like 90% down on the portfolio?
I do, yes,
really?
And I think that she's going to retire and join a nunnery. That's really what I believe. You know, she's very religious. You know, she has said before. Oh yeah, she said before that that's part of her investment process. Is she prays. She wakes up and prays every morning for her portfolio.
Oh God. Okay.
So, you know, she'll come out and she'll say, "Oh, I found my real cause in life, right? It's not about this money chasing thing." Of course, she'll say this after she's got $100 million in the bank, but you know, it's not about this money chasing. The call to God is here for me, and she'll join a nunnery, and you know, to me, that's what
scary words when it comes to managing money. Hope, pray.
Oh, everything she does is scary, but you know, watch for those three things. And those things take time, right? Kathy goes to a nunnery. That's when the people at Morgan Stanley, 70% of them are gone, and Saylor,
well, hey,
Saylor's done.
Goldman reorganizing structurally globally that we're hearing. So, you know, maybe they're flushing out the redundant managers and swapping them out for bots.
Maybe they should. They certainly should be. So
maybe Kathy creates like a Kathy bot, and then she's just gone. And tell you what,
get thee to a nunnery. That if I ever met Kathy Wood, that's all I would say to her. Get thee to a nunnery.
All right, listen, we're coming up on to the oil pit open here. Yes,
all right, good luck, man.
Thank you as always. To see you at 43s.
Yeah, good talking to you.